Michael here. Welcome to my sweet luck. The essays of Warren Buffett summary. Prologue. Owner-related business principles. So every single person who have bought this Berkshire Hathaway shares and Charlie Munger and Warren Buffett expects them to understand what they have to know about the principles that they have set. So here they are. Shareholders as owner partners. That means they are owner as well, yeah, and partners as well. So Buffett and Munger wants the shareholders preferable stay as owners indefinitely in this long-term partnership. Number 2, in line with Berkshire's owner orientation, most of our directors have a major portion of their net worth invested in the company. We eat our own cooking. They are comfortable with all the eggs in one basket because Berkshire owns a wide variety of extraordinary businesses. Number 3, our long-term economic goal, subject to some qualifications mentioned later, is to maximize Berkshire's average annual rate of gain in intrinsic business value on a per-share basis. Number 4, our preference would be to reach our goal by directly owning a diversified group of businesses that generate cash and consistently earn above average returns on capital. Our second choice is to own parts of similar businesses attained primarily through purchases of marketable common stocks by our insurance subsidiaries. The price and availability of businesses and the need for insurance capital determine any given year's capital allocations. Number 5, because of our two-pronged approach to business ownership and because of the limitations of conventional accounting, consolidated reported earnings may reveal relatively little about our true economic performance. Charlie and Warren Buffett, both as owners and managers, virtually ignore such consolidated numbers. However, they will also report to you the earnings of each major business they have control. Numbers we consider of great importance. These figures, along with other information we will supply about the individual businesses, should generally aid you in making judgments about them. We try to give you in the annual report the numbers and other information that really matter. Number 6, accounting consequences do not influence our operating or capital allocation decisions. When acquisition costs are similar, we much prefer to purchase $2 of earnings that is not reportable by us under standard accounting principles than to purchase $1 of earnings that is reportable. Number 7, we use debt sparingly. And when we do borrow, we attempt to structure our loans on a long-term fixed rate basis. We will reject interesting opportunities rather than over-leverage our balance sheet. Number 8, we will not diversify by purchasing entire businesses at controlled prices that ignore long-term economic consequences to our shareholders. We will only do with your money what we would do with our own, weighing fully the values you can obtain by diversifying your own portfolios through direct purchases in the stock market. Number 9, we feel noble intentions should be checked periodically against results. We test the wisdom of retaining earnings by assessing whether retention over time delivers shareholders at least $1 of market value for each $1 retained. To date, this test has been met. We will continue to apply it on a 5-year rolling basis. As our net worth grows, it is more difficult to use retained earnings wisely. We will issue common stock only when we receive as much in business value as we give. This rule applies to all forms of issuance, not only mergers or public stock offerings, but stock for debt swaps, stock options, and convertible securities as well. We will not sell small portions of your company, and that is what the issuance of shares amounts to, on a basis inconsistent with the value of the entire enterprise. Number 11, regardless of price, we have no interest at all in selling any good businesses that Berkshire owns. Number 12, we will be candid in our reporting to you, emphasizing the pluses and minuses important in appraising business value. Our guideline is to tell you the business facts that we would want to know if our positions were reversed. Number 13, despite our policy of candor, we will discuss our activities in marketable securities only to the extent legally required. Good investment ideas are rare, valuable, and subject to competitive appropriation, just as good product or business acquisition ideas are. Therefore, we normally will not talk about our investment ideas. This ban extends even to securities we have sold because we may purchase them again, and to stocks we are incorrectly rumored to be buying. Number 14, To the extent possible, we would like each Berkshire shareholder to record a gain or loss in market value during his period of ownership that is proportional to the gain or loss in per share intrinsic value recorded by the company during that holding period. Number 15. We regularly compare the gain in Berkshire per share book value to the performance of the S&P 500. Over time, we hope to outpace this yardstick. Wow, that's awesome. So thanks a lot. Follow up with the next chapter, and do leave your comments, do leave your suggestions. I'm learning way a lot about businesses more from Warren Buffett and Charlie Munger than any other business books. Thanks a lot, guys. Thank you. See you all again. Wish you my sweet luck.